Welcome everyone to another episode of the Gold Silver Bitcoin Show presented by GoldSilverBitcoin.com. We are more than honored to be sitting down today with Gareth Soloway. Gareth is his analysis can be found at inthemoneystocks.com and also verifiedinvestingcrypto.com. He's on Twitter at Gareth Soloway. Thank you so much, Gareth, for joining us today.
Hey, thanks so much for having me. It's a pleasure to be here.
So it's December 13th. We are in the midst of a dump in the Bitcoin market. What's your read on what's going on there?
Yeah, so we continue to kind of trail off here. We're having a nice down day today. Let's jump right into the charts. And I think what you have to notice here is that you're potentially forming some very, very bearish price action. And the first thing I see on the chart, right? So if you look at the chart of Bitcoin, we're trading around 46,000, down pretty significantly on the day. But the number one thing is this low pivot from about a week ago, which was at 42,000. That's what you need to see hold for the Bitcoin market to have any chance of kind of regaining its strength here in the near term. If that level gives way, there's a little support at 40,000 and then not a whole lot until 30,000 on the chart. The other thing that's kind of concerning me here is that you're almost looking like a repeat of earlier this year where you went from 60,000 down to 30,000. And I want to show you that here. So we had this head and shoulders pattern on the Bitcoin chart right here, right? So this was earlier this year. This is a pattern that I recognized and I called out. And you can see very, very clearly shoulder, head, and shoulder. And then when we broke, it had that quick fall all the way down to 30,000 right here. Now, what's concerning me here is you have a bigger head and shoulders potentially forming. Shoulder, head, and then maybe is this beginning to form a right shoulder? And again, what's scary about this is that the same type of dump that took us down to 30,000 on this size pattern is now bigger, which means we're going to go lower if it plays out on this pattern. The downside target, believe it or not, is potentially all the way down to 20,000. So for me, I'm very, very scared in terms of, it breeds opportunity, right? So anytime a price is going to drop significantly, it could be a good buying opportunity. But there's a lot of bulls out there that are in at 55, 60, 65,000 that got in on the breakout earlier in October. And I do think that they are going to be in for a rude awakening here.
Analysts are saying also that we've seen a double top in Bitcoin lately. Are you seeing the same thing?
Yeah, 100%. And in fact, I still remember I was at a conference at a summit in Dubai when this was going on. And I still remember being very cautious when I was presenting and saying, hey guys, don't necessarily buy this breakout here. This could be a double top. It could be a fake out. And they all were saying, oh, but higher highs, this is exactly what you're going to see. Bitcoin's going to 100,000. And I actually do believe it's going to 100, even 500,000. I just think you have to go through the cycle first. There's almost like a human body to it, if you will, with the charts, where they go through these periods of up cycles, down cycles, and you're honestly coming into a down cycle. And the reason you can say that is because if you look back, Bitcoin was created in 2009. 4 years later was 2013. That was the first epic spike in Bitcoin. Then 4 years later, 2017. 4 years later, here we are in 2021. And so it does make it seem like this is kind of a very simple double top where you're going into a crypto bear market. And again, not to talk about other coins out there, but there's a lot of coins out there that are down 60, 70% off of their highs. And that would be considered a winter, if you will.
That makes sense. So now $20,000 doesn't surprise me. When I was looking at the charts this last summer, I don't spend too much time in charts, but I can briefly get a feel for them just based on having looked at gold and silver charts when I was younger and just being close to these markets. And I do see a lot of support at the $20,000 range. And that is a range that I've been eyeballing since the first run up to the $65,000 approximate price target. So we go back to March of 2020. And I believe we have essentially a sell-off from, I think it was approximately $13,000, if I'm right, Bitcoin at the time when Donald Trump announced that flights would be banned basically from Europe into the United States. Everything sold off, including Bitcoin, pretty dramatically. And it's pretty obvious that was going to happen during that talk. What would happen is that everything would sell off most likely. And that's exactly what did happen. Now, what I think is unique is we did see Bitcoin recover quicker than other commodities and assets. Historically, gold bugs will say, oh, well, gold and silver do sell off when there is a market sell off, but they come back relatively quickly. I think Bitcoin's coming back, at least in some recent examples, even quicker than the precious metals are, which
Mhm.
has implications for it as a investment, as a hedge, as a just something to hold. So I'm
Yeah.
curious, you know, so we take off from approximately 10,000 bucks and head basically straight to 30 and then on to $60,000 in almost like a upward trajectory. But yet that is still only 3 times from where we started this run up, which is a 10K, which is big, which for Bitcoin is quite modest. Now, if we go back down to the $33,000 range, let's say, then I don't think a lot of Bitcoiners per se are going to be panicking. A lot of people in the altcoins might be because they um, are probably experiencing heightened volatility and weaker fundamentals, no doubt.
Mhm.
Now, I think things change once we break that 30K range and start heading towards 20K. Now, I think we're looking at kind of that's a true, I think, bear market in Bitcoin. Do you
Yeah.
have any comments on what I've said? And then I also kind of want to like look at the chart and kind of take a step back because we're looking at a lot of predictions that Bitcoin would go to $250,000 this year, $100,000 this year. We're on a in terms of a 5 to 10 year prediction, predictions of like $500,000, which would make Bitcoin the equivalent of the gold market, even to $1 million, which would make it
Mhm.
about twice the gold market.
Yeah.
So I'm curious, could you speak to first and foremost what we've seen Bitcoin do since the great lockdown, as the IMF called it?
Yeah. Yeah. So I agree with a lot of what you're saying. We saw gold quickly. I mean, everything sold off because there was a panic in March of 2020. But you saw gold recover quickly. You saw Bitcoin recover quickly. And what that tells me, and it reinforces my longer term view that Bitcoin is going to be the digital gold. I still think gold can exist in this market, and I still think there's a place for it. I mean, heck, I'm still buying physical gold and investing in gold because I like a diversified portfolio. But once you get Bitcoin to kind of flush out a lot of this weak money that has come in over the last year or so, chasing, they really, there's so many investors who don't really understand Bitcoin, but it's just the hot thing and they're just running into it. You need to flush those individuals out. And I think honestly, the panic that will ensue will drive it down to 20,000. So, that's where I'm getting here. And if you look at the chart here on Bitcoin, it's that, let me just erase that line, but basically the 20,000 level comes from that December 2017 high right here, which makes sense that if Bitcoin sells off, you're going to have a ton of support right in that range. Now, I think it could pierce it because panic and fear have a way of piercing levels, but I agree that that is probably a good area to start accumulating. Again, just be ready for it to go a little bit lower in the short term, but certainly a good opportunity there. So yeah, I'm in agreement with you. I think longer term, it makes total sense that there's a place in our society for cryptocurrency, just like gold. But you have to flush it out here. I mean, there was just too many. You probably saw it. I mean, you pay attention to Twitter. There were, when it broke above 65,000, the craziness of the kind of the level of bulls out there. If you traded the markets ever, that when too many people are bullish, it actually has to reverse, or generally it will reverse, at least in the short term.
I want to talk about social media and the influence it has on markets and
Mhm.
Bitcoin generally, but also I want to kind of take a step back and look at, I guess, Bitcoin over its life. I'm
Mhm.
now, it's relatively new. I don't think we can really come to any conclusions. We can create theses about Bitcoin and its in various facets,
Mhm.
but I don't think that we can make any conclusions about its viability long term necessarily, although it certainly seems one way that this is here to stay. And we also, in terms of price predictions and understanding its past price movements, might be a little belabored to draw too many conclusions from that yet. I think there is a lot of analysis to be done, taking a look at how it's behaved over the last 12 years.
Mhm.
So I'm curious, could you speak to, I guess, the overall Bitcoin price chart, what you see it's done? What have we learned about these manias and bear markets? And any
Yeah.
other sort of unique takes that you have on the 12-year Bitcoin chart?
Yeah. So I mean, here's the Bitcoin chart basically going back to its start. And what's kind of cool about this is it's as small as it is. This was an epic move back in 2013, where I think price went from literally pennies or dollars to about $1,300 per Bitcoin. And then it had that normal correction where it came all the way back down to basically $100. Then you had the 2017 high, and then here we are making this bigger high. And you can see the moves are just incredible when you get in a bull market. But it kind of makes sense because number one, it's a newer technology, it's a newer store of safety and value. So people are going to be much more eager to jump in, and there's less liquidity in the place. And you don't have a ton of institutions, you don't have pension funds that are kind of anchoring Bitcoin at this point. So the volatility is going to be much greater because the swings in emotion are greater. But again, if you look at this, what should end up happening over time is that it should continue to generally track higher, even though I think you have to have the same sort of pullbacks that you saw in these periods back down. But overall, the angle is what you care about if you're a long-term investor, which is that continued kind of move up, even with these 80% corrections in the chart. So I think that's important to kind of recognize that you have to have these flush outs. This is a newer thing. And again, just generally, you're going to have people saying, okay, they're going to throw the baby out with the bathwater in bad times, which is going to drive it lower. And they're going to chase it at highs, which create these wilder swings. But the trajectory is what you care about as an investor in Bitcoin.
Feel free to keep the chart up. I'm interested in looking back at the 2013 period. Actually, I think in 2011, there is a period there where Bitcoin goes up to about $30, and it doesn't register at all on this chart, really.
No, I'm trying to zoom in on it for you. Here we go. I think this is what you're talking about here.
So
you had this run up in early 2000.
So this was like to like over 1,000, but somewhere in 2011, there's a $30 run up. And I think that's the first real mania where Bitcoin, I think, went from, I think a couple bucks to about $30 real quick. And I'm sure even older OG Bitcoiners from Bitcoin Talk days will talk about, the run up to 50 cents. But now that the run up to $30 doesn't even register on this chart. Now in 2013, I think what's going on at this point is we've just had Mt. Gox collapse. We've had Silk Road do billions of dollars of transactions. That's how Bitcoin got the reputation of being for drug dealers. And we had Ross Ulbricht be detained at the San Francisco Public Library. We also had a lot of mainstream coverage. So for the first time, Bitcoin is incessantly being covered by the mainstream news. And it is in, I guess, it's in concert with the run up. And I feel like those two things kind of played off of each other quite nicely. Now, then we have a really sustained bear market after that point, before the run up in 2017, 2018, I believe it is. And now that one was interesting because we saw, of course, Bitcoin run up to $20,000, but we also saw the proliferation of the ICOs and the altcoins. And I always wonder about what's going on in this particular bull market. Now, of course, I think there is increasing demand over time. And since Bitcoin will only ever have 21 million, assuming increasing demand, it's an inflationary digital commodity that you would expect it to go up. But also there was so much activity on the ICO front that I think it's clear, to me at least, that a lot of that money probably ended up back into Bitcoin, which created demand for Bitcoin. And then we saw another bear market. Now this bear market was shorter. And I think the industry too was more seasoned at bear markets. But what's notable about that, of course, is that we have the bear market, and the next bull run is essentially kicked off by the lockdown and this move towards more digital way of doing things. Any thoughts on any of that?
Yeah, so I think the slightly shorter bear markets can be viewed as noticing that the Federal Reserve was printing more and more money, right? So, I mean, it makes sense that people would want, in fact, that's why I'm interested in Bitcoin. I don't know too much about the blockchain and all these other things. I just know that there's a maximum run of 21 million Bitcoins. So it's a limited supply versus the US dollar, which the Federal Reserve can just print trillions of, and the government can just run up crazy debt anytime they want, or so it seems. So, I mean, I think that's part of it that kind of makes the Bitcoin so intriguing. But I do think that overall you have a scenario here where you have an asset here that people are starting to adapt to and starting to take into account. So for me, it's looking at the cycles, right? So early on, you had this initial, like you mentioned, in 2013, just people starting to hear about it. You had the big run. 2017, you had the altcoins coming out, and that kind of created more buzz around it. And now you're in this new cycle where you're starting to see corporations adopt it. They're starting to put it on their balance sheet. We've seen Elon Musk, Jack Dorsey talk about it, lots of big players. And I still think you'll have some sort of bear market, which takes it way down. But the next cycle will be the full adoption cycle. So you're going to see, for instance, regulation come from the government in a good way. So there's bad regulation and there's good regulation. Good regulation for me would be having the government, understand that it's now a major kind of job producer in the country. For instance, mining Bitcoin in Texas, huge. So they're not going to really obliterate Bitcoin. They're going to make sure that it's done right. Maybe accounts can be FDIC insured, stuff like that, where you have some sort of regulation. So now pension funds. I mean, think about the trillions of dollars in pension funds. Imagine if pension funds just put 3% of their money in Bitcoin. It would send it to, $250,000 in no time at all. So you need this next cycle. Whenever we bottom out here, I really do believe that next cycle will be the full adoption cycle, where even the government will start to recognize it as a not alternative to the dollar, but kind of like another gold type situation.
So after the full adoption cycle, which I think is called also the hyper Bitcoinization. And so could you speak to, once that happens, what the following bear market might look like in relation to the bear markets of, say, 2014 through 20, et cetera?
Wow. So that's going a couple cycles ahead. That's really tough to know. I think that this current cycle that we're coming out of now, which is going to lead to this bear market or crypto winter, is going to be driven by basically a panic and reduction in the monetary, margin levels in the system. So we've had a Federal Reserve that has just been basically like, here's free money, just like let it all go out. And it's created an asset bubble in all assets, maybe not gold. I would say gold and some of the commodities, maybe not so much. Those are the ones I actually favor going into 2022. In fact, I'll go on record and saying I think gold will actually outperform Bitcoin in 2022, even though it won't outperform it in the long run. But again, you have this scenario where you have to flush out all this leverage in the system, and that's going to really take Bitcoin down significantly. And you'll get to a point where people, I still remember in 2018, after the 2017 highs, CNBC used to always show Bitcoin on their lower kind of area on the screen, and it totally went away. And that was kind of a good signal that it was a good time to buy, because everyone was hating on it at that point. No one liked it. We talked about the social media aspect of, whether something's going to go up or down. It's almost a contrarian indicator when it gets to those extremes.
What other comments do you have about Bitcoin right now? Like, where do you feel it's going, and what factors are you looking at that might hint where it's headed?
So right off the bat, I mean, Bitcoin's a great trading vehicle. So I'm a trader, I'm a swing trader. So I'm looking to buy and add to the positions in Bitcoin here. So if we go back to the daily chart, let's jump back to the daily. You're actually getting a little bit of a bounce here on an intraday basis. But basically, you have to look at this low pivot as being a major support at 42,000. And then really you have another level here. If you zoom out on the chart, let me do that now, going back to previous levels here. So if you look at these pivot tops right here and draw a line right through, there's even more support at 40,000. And then we talked about that $30,000 level here, where this was the low of that last big down move, where it kind of bounced in between the 40 and 30,000 level before breaking out, retesting here, and then making that bigger move to the upside. So I'm kind of in the position that as a swing trader, if you're quick and you get in and out within a week or two, you'll probably be able to make money off this 40,000 level as well as 30. I would just recommend not marrying Bitcoin at this point. There are so many people who are hodlers, right? They want to just buy and hold forever. I think honestly, you can get it cheaper down the line, but I'll be a buyer at this level here, at this level here as well.
Can you talk more about your swing trade strategy as it relates to Bitcoin and how it's worked out?
Yeah, so it's been good. I haven't necessarily always sold the tops and bought the bottoms, but it's in generally been making me money. And the idea is charts can be treated all the same. So if you're a swing trader in stocks, which is what I grew up as, trading in and out of stocks, and swing trading, for those of you that don't know, is like you get in and out probably in weeks or a couple months. You're not holding for years. There's no long-term cap gains. This is all short-term, money generating type activity. So you basically are looking at charts and you buy support and you sell resistance. So the beautiful thing about a chart, whether it's on a stock or a Bitcoin or commodity, is that charts are created by people, right? Buyers and sellers. And buyers and sellers, people are ruled by two main factors, greed and fear. So charts, it doesn't matter what it is, charts should behave the same because they're underlying factors of why they're created are humans, which are based on emotion. So that's why, so you can buy support, you can sell resistance on Bitcoin, and it's actually worked very, very well thus far. And I'm going to continue to do it. I mean, that's the beautiful thing about launching verifiedinvestingcrypto.com is it's the same as swing trading stocks.
And so you're not seeing anything unique about like the Bitcoin chart and the way that it behaves compared to traditional stocks.
The only difference is that traders in or investors in crypto are much more emotional. So what it tends to do is it tends to create wider moves. So, you might have a support level, let's say at 40,000, but the panic generated on Bitcoin versus, let's say, Apple stock, it's going to create a dip below 40 significantly before snapping back because of that uber kind of fear factor. Same thing with the upside. The upside can get overdone much more than something like Apple that has these institutions anchoring it, and they're very kind of methodical. They have algorithms all printed out and ready to trade. Bitcoin doesn't have as much of that, and it creates the wilder swings, but ultimately it still behaves and it still eventually bounces at the right levels.
So not only are they more fearful, but they're also greedier at the tops, you would estimate.
Yeah, and it's really just because smaller. You see the crowd that's hugely into Bitcoin is a younger crowd. It's more emotional. You see it on social media how people are just so like 100% in, and there's not as much institutional involvement in Bitcoin right now because number one, it's not regulated, so you don't have like hedge funds trading in and out as much. And just other factors like the institution's anchor stocks versus the emotional smaller investor. So anytime you deal with a market, it's almost like small caps, right? Small caps, there's not a lot of big institutions that can own small caps because they can't buy the size they want. So the smaller investor can run these small caps up like 200, 300, 400%, much like the altcoins get run. And then again, same thing on the way down, they go down way more because of the emotional response.
How do you keep emotions out of it?
Oh, I mean, it's hard to do. It's years and years of trading. It's being understanding of what. So the thing is, eventually, as you start trading the levels more and more, you start to recognize that the levels are your only advantage on a chart. So if I let my emotions get a hold of me, instead of buying where I should, I'll be wanting to sell where I should, right? So it's really about years and years of experience and just recognizing that we are emotional beings and you have to try to take that out. You have to think about the level versus what your gut or your fear side is telling you. Same thing on the greed side. I always say this great analogy is that, for some reason in stocks and cryptos, people always want to pay up for them. Like, we saw Bitcoin at 65, 66, 67, 68,000, and there were so many buyers wanting to jump in. And I always tell people to treat any investment like you would going to the mall to buy a pair of jeans, right? You go to the mall, you see a nice pair of jeans, they're 50% off. You say, okay, I'll buy those. They're 50% off. You don't go to the mall and be like, oh my God, they just jacked up those pair of jeans 300%. Let me jump in and buy them today, right? I mean, that mentality doesn't even cross our minds when we see that type of thing. You have to translate that over to investing, and that will be a huge success maker.
Have you studied any of the Bitcoin bull markets and how they relate or look compared to one another? And have you made any observations about that?
Yeah, I mean, I have absolutely done some of that in terms of studying. And it's definitely, so you definitely have these drawdowns, which is what I'm paying attention to, that are massive, right? So I mean, in 2013, you went from basically 12, 1300 back to $100 to $200. In 2017, we went from almost 20,000 back down to 3,500 or so. So I mean, you have to, if you're thinking you could be in a cycle, which is a 4-year cycle that we're in, you have to think that there's easily downside to even below 20,000 before kind of the next bull run can start. Now, it's not to say that history always repeats, but it tends to rhyme. And it tends to rhyme again because investors are the ones buying and selling, and we're ruled by emotion, right? So again, the cycles are very pronounced at this point with these massive moves to the upside. But again, you kind of just have to respect it and then understand that the downside is going to be the same. But in terms of pivot highs and so forth, there's a little bit of mirroring. It's not 100%. Like, for instance, the cycle we just are in right now, you had a high in April and another higher high in October. If you go to 2017, we never had that. We never made a higher high later in the cycle.
What's the argument for we're not in a bear market and Bitcoin's heading higher. It's going to approach $100,000. And when I say $100,000, everyone's going to be eyeballing $100,000. I think that the smart
Yeah.
money is going to be looking at a little bit lesser than that. So can you speak to that thesis?
Yeah, so I think when it comes to Bitcoin, right? So you first of all have a lot of bulls that are just like so diehard. They're not really paying attention to technicals. They're talking about on-chain analysis, which is valid, but at the same time, I think on-chain analysis is like fundamentals in stocks. It's something that matters over the long term, not in the very short term when you have fear. But if you're talking about the case that it would go to 100,000 or higher, you have to just look back to the Federal Reserve, the printing of money, the amount of money in the system versus how many Bitcoins there are. And then there's a lot of factors that eventually do make me think that, yeah, it is going higher. So I actually agree with all those people. I just think my timeline is a little bit different in terms of when it will happen.
You know, there is so much money in the system. And I think that as Henry Hazlitt stated, when government prints money and there's inflation, then that encourages reckless spending. And I would say that we've seen that with the retail bro. And I don't think that the retail bro is recklessly buying Bitcoins. I don't think buying Bitcoins is very reckless. In fact, it's perceived by a lot of young people as kind of almost like conservative. Now,
Right.
where I think we've seen the recklessness bear its ugly head would be in the dog coin meme markets.
Yeah.
So that's Dogecoin, et cetera. So I
Yeah.
think that there's been a lot of demand that was sapped from Bitcoin into Dogecoin, for instance. I've received a lot of messages this cycle about when people are going to be able to get out of Dogecoin. And the first thing I do is explain to them how there will only ever be 21 million Bitcoins in existence, whilst there will be potentially infinite Dogecoin in existence. And there's no certainty there, which makes these two completely different markets. So could you speak a little bit to, I guess, well, I guess let's switch gears, unless you have any further comments about Bitcoin.
Yeah, let me just talk about something like you're saying. So number one, I definitely agree that the fact that, I mean, when you have these joke coins that are produced and they get $60 billion valuations, I don't look at that as being helpful to the cryptocurrency in the future, right? I mean, you want people to take it seriously. There's a lot of people that jump on these things that probably will lose 100% of their money. And then the question is, do they ever trust an investment in cryptocurrency again, or how long does it take? So I think that's part of it that you have to be aware of. So I think that's the fluff. That's the excess in the system. I liken Bitcoin and cryptocurrencies to the beginning of the internet.coms. So if you go back to like the late 90s, you had all these .coms, including Amazon, were running incredibly high. I mean, I still remember it was my early investing career where I was playing around with some of these like penny stocks that were .coms. And I mean, they would double, triple almost daily. It was so incredible. And then you look at what happened with all of these alternate coins, and it's very, very similar. And there's so many out there, just like the .coms. And what would we know about the .coms? We know that 95% of them went bust. They went to zero. And then what happened? Some of them survived. Amazon survived. Google survived. And they thrived. And now they're way higher. And that's really what I like in Bitcoin too right now. In fact, I want to show this chart because this is just some crazy stuff here. So this is the chart of Amazon back in from 1998, 99, 2000. And then look at what happened. So this is in the .com era. The stock ran up from literally, you're talking about $4, $3 here, all the way up to over $100, right? So put that in perspective to what Bitcoin's done, and it's kind of almost comparable. And then what happened when the .com bubble burst, Amazon came back down to sub $10. In fact, it traded as low as about $5 over here. Now, listen, we know where Amazon is right now. Amazon's north of $3,000 a share. And I really want people to understand is that even with a washout, it's not the end of the world. You'll get these washouts. I think you need to see most of these altcoins go away, and then the strong will ultimately survive, just like Amazon did. And believe it or not, this high pivot, what if you look at this chart on Amazon, it's almost similar to what we're seeing on Bitcoin over the last few months. Here's your high, here's a higher high, and here's a higher high, right? So if you think about April, this could be April, this could be early October, and this could be later October with higher highs. And then you went into this big drop. So again, listen, it's not necessarily a perfect comparison, but I think that, again, the crypto market is here to stay. It's just there's a lot of junk in it that has to be washed out.
What are you looking at in terms of the stock market, and what implications does that have for Bitcoin?
Yeah, so I think one of my biggest concerns with the stock market is that you have a scenario here where the leverage in the system has benefited stocks, and by default it has benefited cryptocurrency. So what we saw is, if you looked at when Bitcoin fell from, I think it was that Friday into Saturday period, where it went from like 50 some odd thousand down to 42,000 in just like literally an hour or less. There, that day in the stock market, that Friday, there was a massive sell-off in the stock market. And so as a crypto trader, you want to be aware of that, that if the stock market goes into a bear market, it probably causes deleveraging that then eventually translates over into the cryptocurrency market. Now, having said that, we aren't quite there yet, so it gives a little bit of hope to Bitcoin bulls. But one of the things I'm watching on the S&P, and I'll show my chart here, is this chart pattern. So you can see these parallel lines going back to basically 2020, almost all the way back to March of 2020. But the market has stayed within this parallel bar range for the whole entire time. As a trader or a stock trader, you want to follow the low end of this trend line. If price breaks below that, that would be where you would want to be very conservative and very, very careful, both in the stock market as well as in the cryptocurrency market.
You mentioned that fall from Friday to Saturday, and that's something that I think we often see in the cryptocurrency markets, Bitcoin included, is the argument goes thinner liquidity makes for more volatile markets, and we see more aggressive moves to either side, really. Could you speak to the dynamic of weekend trading in Bitcoin?
Yeah, so there's no doubt that a lot of the bigger traders out there on the weekends, they tend to, they want to be with their families. They're making lots of money. They don't need to be in front of the screen 24/7. And I think it makes Bitcoin more prone to these big moves like you're mentioning. So I 100% agree that if you look at these kind of crazy flushes, they often either happen overnight when a lot of the US participants and the big funds are sleeping, or they happen on weekends. So yeah, I think you're 100% right. It's lack of liquidity, which means that a few bigger sellers can have a much bigger impact on the overall market, triggering stops and kind of the deleveraging in the crypto market.
Do you see a sell-off in the near future for the stock market overall?
I do. So, I just look at it like this, and the thought process is that the markets have been in the longest expansionary period in history, right? So from 2009 all the way to where we currently are, just new all-time high, small pullback, new all-time high, small pullback. And the main thing that has happened from that point is that the Federal Reserve has lowered interest rates basically to zero, and they've printed tons of money. Look at the US national debt, what it's at compared to where it was back then. So the money has just flooded into the system. The fact that the Fed is starting to pull back and inflation is starting to surge to the upside, that means that, again, if the money flowing in helped expand the markets and raise the markets, then by default, it should mean a contraction in the stock market, and valuations should pull back. So again, if the Fed just pulls back on their 120 billion a month in money that they're printing right now, that's $1.5 trillion that the system will not see on a monthly or a yearly basis. That's a big amount. 1.5 trillion. So again, that's just assuming that interest rates don't go higher. Now, if you consider that the government was sending out checks to Americans multiple times in the last year, and you take that away, it does make me think that, yeah, the markets probably are on borrowed time here. And I think in the very least, you're going to see a lot more kind of exaggerated moves in the stock market.
Okay, with that said, I'm curious. I want to switch gears a little bit, looking at gold and silver now. So, what are you looking at in terms of gold specifically?
Yeah, so I'm a huge fan of gold. I think I mentioned earlier that I do anticipate gold will outperform Bitcoin and even the stock market in 2022. So I do have a position in GLD. I have positions in Newmont Mining. I have GDX right now at these current levels. I just picked it up last week, in fact. And what you can see on the gold chart here is that we're basically in this beautiful channel. Let me erase those lines there. You can see that what we've done is gone nowhere over the last year. Now, most people would say, oh, this is gold is dead. Oh, it stinks. What I look at this and I think and I see is that it's consolidating in a bullish pattern. So if you zoom out on the chart here on gold, it had this massive move up from 2018 all the way to basically the 2020 highs in July, right, or August. It has to digest that move. No stock or commodity or crypto just goes up for infinity amount of time without digesting the move, right? So this is actually a bull flag. Notice the parallel lines. And what you're watching for is you're watching for a breakout above this level here, right? So if you can get a breakout above this level, then you should easily go back to this high. And my guess is by the end of 2022, you could be looking at a 3,000 handle on spot gold. So again, I'm hugely bullish on gold. I think this price action is exactly what you want to see in terms of bullish consolidation. It's the, almost identical, perfect textbook bull flag formation. And you just need to see the breakout, which is really above. It looks like the price point for a breakout would be around 1870 or so. So if you can get above 1870, 1875, you should see a very, very nice move to the upside.
What past breakouts to the upside in gold does this parallel, in your opinion? Is it similar to 2012 or?
So what's weird is that it's actually very similar to the high inflation period of the mid 70s to mid 80s, right? So in the mid 70s, you started to see inflation surging, and gold honestly did nothing for like a few years. It just kind of traded sideways, which had everyone scratching their heads back then, considering everyone views gold as like, that protection against inflation. And then all of a sudden, kind of as it got to the late 70s into the 80s, gold had this massive surge up. So the fact that it's not responding, so many people are like, oh, but inflation's 8%. Why isn't gold ripping up? This is almost identical to that kind of period, which makes me even more bullish in terms of thinking what could be the upside on gold should it start to break out.
And how about silver? What are you seeing there? Obviously in 2011, we saw silver break out in 2009, I believe it was trading around $9. And by 2011, it was at $50. It was at the old Hump Brother high. So what do you see in silver's future, a similar breakout to the upside?
I do see silver. Silver's a little trickier for me because it has that industrial side to it where, the economy does require silver. But I think overall, you have to continue to believe that silver is still doing the same thing that gold is. Here's your bullish consolidation after this move up from the lows of 2020 to the highs. You're looking for this down sloping trend line to be your breakout point. And I honestly think that you'll go to double top around $50 when it finally does break out. So now the breakout is a little bit further away than gold, but silver tends to move percentage-wise more. But this is the level here you want to see on silver, around 28, currently around $28. That's the level where you'd get a breakout of this down-sloping trend line. And then I think, again, you'd have a little bit of resistance here at this $30 level, which was where Wall Street Bets tried to pump it and break it out. If it gets through $30, it goes to 50 very, very quickly. So again, history doesn't always repeat. But it does rhyme very often. And I do think you'll have another meteoric run like we saw in, I guess, was it 2008 to 2011 or that move where we went to $50 on silver?
Can you speak to the effect of Wall Street Bets on the silver market, if you think there is any?
I mean, it was a nice try by them. I understand that they wanted to run silver, but the problem is, running AMC or GameStop when they're, a few $billion companies versus the silver market, which is just massive. I mean, they just didn't understand the metrics of needing, how much money from the retail side to run something that's $1 trillion market or more. And I think that's the essence of it. I mean, imagine if Wall Street Bets tried to run Apple higher, right? At almost 3 trillion valuation. It's so hard to lift that monster to the upside in a meaningful way. So I think that was mainly the issue. But I think honestly, the charts are telling us institutions are accumulating both gold and silver. They just haven't wanted to break it out yet. There will be a point where they have massive positions and they will say, okay, guys, let's do this. And then you'll see that massive move up on both those metals.
When Tesla purchased Bitcoin in its acquisition statement, it stated that it was also looking at other commodities, including gold. Did you catch wind of that? And what did you make of it?
Yeah, so I think that's smart. So if I was the CEO of Tesla, obviously I'm not, especially from the net worth perspective, but keep in mind, Palantir actually did that. A few months ago, Palantir's CEO said they bought some gold to kind of anchor their portfolio. So I think more and more companies are going to do that because it's the smart thing to do. When you have billions on your balance sheet and you're just letting it sit there, you can't really say to your investors, at your annual meetings, like, inflation's 8%. So, we had $100 million on our balance sheet. It's only worth 92 billion or 92 million now, right? Because of 8% inflation. So I think more and more companies are going to do that. And that's going to make, when that can happen, it's going to absolutely trigger the markets to the upside. I'm surprised no other companies have come and said that they did that yet after Palantir, but I do think it's absolutely coming.
Can you speak more about Palantir purchasing gold? They said that it was for a Black Swan event, I believe, in particular. So I could imagine that they are ruminating about acquiring Bitcoin. I believe they would have to make a public statement. I believe they're publicly traded, so
Yeah.
that would be public information. And perhaps we hear MicroStrategy's Michael Saylor talking about this is a hedge against inflation and money printing. We also have we have Elon Musk probably thinking along the same lines. He makes utterances that resonate, maybe not in the context of Bitcoin, but in general, that he too is aware that when the dollar supply increases, that the individual nodes lose value. And then we look at Palantir, and they are buying gold for a dark swan event. Now, what could that black swan event be?
Yeah.
You know,
So there's unfortunately there's so many potential ones out there, right? So I think the ones that I'm most concerned about, it would be the Russian troop, massing on the Ukraine border, and does that spill over, and does it draw in other countries to the conflict? I mean, that could be a big thing. China and Taiwan is another big one. And then here in the U.S., you have to look at the fact that, is there at a point where the financial system in the US goes into a tailspin, which is what I think will ultimately happen, where, so much money has gone into the system. The Fed has very few bullets left in their gun, if any at all, to combat inflation or to, if you think about it, right? So if we get higher inflation, the normal thing would be to raise interest rates. The problem is with US debt where it is, they can only raise interest rates a little before it makes the country go bankrupt from debt payments based on that higher interest rate. So, there's so many boxes that the Federal Reserve and the government are getting put in at this point. And I do worry that at some point you will see this massive kind of panic, kind of like the 2008, 2009 financial crisis, but it likely would be about 10 times worse. That would ultimately, in my opinion, lead the Federal Reserve down to be blamed and ultimately undone, meaning that I don't think the Fed will exist at some point in the future in their normal form. So again, it's a messy thing. It's things that keep me up at night that I kind of hypothesize on, but there certainly are a lot of situations where it makes total sense. In fact, when I buy physical gold and physical silver, I'm not buying it because I want to sell it in a month, right? You don't buy physical to sell right away. I'm doing it as an insurance policy, just like Palantir, where if I wake up one morning and the dollars are worthless and the financial system's down and I can't go get money out of the bank and the credit cards don't work, I want to know that I have a little bit of something that I can feed my family with for an extended period of time. I think that's really the essence of it.
some other black swan events that might happen are, for instance, a cyber pandemic, which we've
Yep.
heard ruminated about by the likes of Klaus Schwab at the World Economic Forum. What that might look like, we don't know, but it certainly would be on the radar, I think, if you're a Fortune 100 company looking to diversify your treasury.
Yep.
Now, could you speak more to the way in which geopolitics play a role in your decision making? And actually, before we go down that road, I'm curious what replaces the Federal Reserve if it no longer exists in its present capacity?
Yeah. So my guess is if the system does crumble, what will emerge will be a kind of a cryptocurrency type system where there'll be a currency that equates to X amount of dollars for every one. So there'll be some sort of redone system, and it'll be basically said to only be able to increase its production. So let's say it's the I don't know, the XYZ currency, right? That comes out of this or whatever it would be. And so it would be a stated run saying that every year only X amount can be printed. So it would be confined. And I think the people are going to demand that. I know as a citizen here in the US, that's where I would go. If things get bad enough, you have to have a government that minds their political finances the same as you do as a household, right? So, I don't run up just crazy amounts of debt on credit card just because I can, or because, oh, I had a tough month. I budget. I have a balanced budget. I make sure I do certain things. So likely what would come out of it would be a new entity that would be in charge of monitoring this. They couldn't print unlimited amounts. It would be already a predetermined expansion of the monetary system. And I also think the government will be, pushed to have a balanced budget at some point where the debt, people, if you think about the young people in this country, the amount of debt that they are going to be saddled with is just insane. And if I'm already now 41 years old, but if I was 20 years old, I would be so annoyed at this whole situation. So again, ultimately, I think the Fed gets demolished in the way that it no longer is called the Fed, and then it will have a new purpose of just monitoring, maybe even on the cyber side, since I think cybersecurity will be the most important thing in the future for any sort of cryptocurrency.
41 still young, my man. I mean, like we're still young, and the
I know.
timelines are going to line up to where we're going to be able to witness some real history, and we already have indeed. So, with that said, of course, the younger generation, I mean, I would be frustrated too. In fact, I was
Mhm.
frustrated watching a lot of the stuff. 2008 comes to mind, the $1 trillion bailout. That was quite notable back then. It might be a
Yeah.
blip today in today's headlines, but so
Yeah.
now
You
opportunities
get,
also. Go
I,
ahead.
I was just going to say, I mean, you just brought up the bailouts and like just going back to 2009 and like the financial bailouts and all of that. I mean, it just drives me insane because, the big thing coming out of the financial crisis was, okay, well, yes, we're going to bail out these entities, but let's make them so they're not too big to fail. And then you look at every bank. I mean, they're all even bigger now. And it's even, they would never let them fail. And it's just, I mean, as someone who pays their taxes and like, loves the country, you see that and you're just like, man, what on earth are they thinking? Like, because it's inevitable that you're going to go through another type of crisis. I mean, it's just the way history goes. And so it's just the short-term thinking that drives me nuts.
We're far way away from the bimetallic standard.
Mhm.
I'm curious, could you speak a little bit? You mentioned public finances and nations managing their budgets sound
Yeah.
in a sound manner. Could you speak to El Salvador and the Bitcoin legal tender law and the acquisitions there?
Yeah, so I mean, we know El Salvador has adopted Bitcoin now, and I think that's the start. A lot of people were surprised when Bitcoin didn't shoot up on the back of that, and the essence is it's El Salvador. Nothing to take away from El Salvador, folks, but in the scheme of Bitcoin holders and world countries, it's a very small country, so it didn't have a big impact at that point. But I think it's the start of something bigger, where you're going to see more of these countries start to look towards cryptocurrency, specifically Bitcoin, maybe Ether as well, as where they can kind of anchor their own currencies and kind of have a store of safety. The question is, how does that affect them printing their own currencies and spending it? And that's the bigger question. And the other question you'd have to ask is, how many of the poor El Salvadorians actually have the ability to buy Bitcoin at this stage? And again, these are questions I don't know, but you hope that it's not some sort of thing that only the elites in those countries have access to and are able to protect themselves against the hyperinflation that a lot of these countries, create.
So, how do geopolitics play a role in your analysis? Do they affect the way you look at the charts at all? Are the charts a reflection of the geopolitics? What do you think?
Yes. So in general, you're not supposed to pay attention to anything but the charts. It's very hard not to. For instance, I'm someone who's been accumulating some of the Chinese stocks down here, and you can't help but think about, hey, tomorrow are we going to see more regulation, and are these stocks going to get crushed again, and all these type of things, versus looking at a chart and seeing the RSI is at 15 and the stock is at multi-year lows. And those are the things you're supposed to pay attention to. So in general, you don't want to pay attention to the geopolitical, just like any sort of news, because it can make you react emotionally, but it's very hard to just kind of block it out totally.
One benefit might be that I'd assume you don't know Chinese, so it might be harder to keep up with the
That's true.
news.
That's true. Yeah. And honestly, just not going online or financial websites helps too. You just avoid all that kind of thing.
So much to discuss.
Yeah, there is.
Social media. Now, what effect do you see that having on the Bitcoin market and markets in general with the retail bro? And is it positive or negative?
I mean, it's positive in that everyone's connected through social media, so people hear about Bitcoin and cryptocurrencies. I think it's negative because the hype that's created usually gets people that can't afford to lose into these cryptocurrencies at the wrong time. And that's, if you think about it, and this has gone on for ages, it goes on in the stock market, but you have bigger players buying, and then social media enables them to pump it. Right now, it's not just bigger players. It's like, you see smaller players pumping it too on social media. But in general, the bigger money is in at the lows, and at the highs, the smaller money enters. And that's happened in stock markets, right? I mean, you guys, I've said before, I'm bearish on the markets here with the Fed tapering, but over the last year, you've seen more money come into the stock market than you have like in the last 20 years from retail investors. That's really concerning because we are at ridiculous valuations. And the same thing in terms of Bitcoin. There's so many new investors in crypto that came in really late because of Dogecoin or Shiba Inu China or even just Bitcoin in general, and they're buying at these inflated levels without really understanding what they're doing. So I think social media is good in certain aspects, and then really it's quite bad in other ones.
Do you use it in a productive fashion to inform your trading?
I do, absolutely. So I do pay attention to what's going on, not so much for decision making because I'm on the charts, but I do absolutely use Twitter to kind of put out charts and interesting little techniques and different observations. And I look at it hopefully like I'm actually helping people versus, and I'm a contrarian trader, so I'm never pumping things at highs or panicking at the lows. I'm more doing the opposite. And I do like to think that over time I've helped people make money by doing that.
The 70s from like 75 or 76 into 79, 80, there was a period that I think some analysts are saying parallel what we're seeing today. Do
Mhm.
you see the same thing, and how so?
Yeah, I mean, there's tons of parallels. I mean, the inflation one's the most obvious one. So I think that's important for investors to recognize. It's one of the reasons why we touched on gold and what it did in terms of not doing much in the early portion of inflation and then really ripping to the upside. But yeah, I think the parallels are there. The inflation now is approaching levels that we haven't seen much of since that period, and I do worry that you've had wage inflation. So everyone's like, oh well, oil's pulling back, natural gas has collapsed, so that'll bring in inflation. And the answer is, yeah, short term it will. But you've had so many increases in wages, from $10 an hour to 15 or 10 to $20, even higher, making 50,000 to making 75,000, that eventually these companies have to pass that increase in wages off through their goods and services that they sell. So while the oil drop and the natural gas drop will bring in short-term inflation numbers over the next couple of months, the long-term trend, in my opinion, is going to be higher for inflation. And I think you're going to be between 5 and 10%, for a long time to come. And it's going to be painful. I mean, a lot of smaller, lower income families and middle income families are already hurting. And unfortunately, I don't think it's going away.
What are you doing to prepare for both the short term and the long term in this environment?
Yeah, so I think investing smartly is the right way to do it. My gold holdings have expanded over the last 6 months. There's no doubt about it. I'm just buying and holding and buying and holding. And I also think the way to get around it is you got to start looking outside of the U.S. Valuations in stocks. Even though inflation can sometimes help, it also can hurt if their margins are cut down by the increase in oil and some of these other things that we've seen recently before the pullback. So I think you start looking at other countries. I'm looking at South America, not to say that they're immune from inflation. They certainly aren't. Same thing with China, but the valuations are vastly under levels versus American stocks. The money has flown into the US at crazy levels from the global markets, right? And that's partially because we're the biggest player on the block. We're the most secure, everything like that. But as the Fed tightens, you should expect that money to start to come out of the US and then look for other areas. And I think, again, there's going to be levels, there's going to be areas in China that are going to be interesting, as well as South America, and maybe Europe, although we'll have to see what happens there with the ECB.
Last question. I'm curious, what do you think about Tether and its impact on the Bitcoin market, if any?
Yeah. So, I mean, this is where I've heard so many things going on with Tether. I don't know if they're actually true or not, but it does make me a little concerned. It's something that you got to pay attention to. Is it, whether Tether is doing some shady things there? I'm not sure, but I wish I knew more about it. I would leave it to people that are smarter than me in regards to that. But definitely kind of keep it on your radar. Follow what's been going on with Tether and what the potential, the arguments are being made for what they're doing and what its impact could be on the crypto market, because it could all be tied into the bear and winter cycle of Bitcoin if it did kind of unfold that way. But hopefully it's not. Hopefully that those are unfounded rumors.
Any other comments as 2021 comes to a close and we start moving into 2022, Gareth?
Yeah. The only thing I would say is based on what I'm seeing, it's going to be more of a swing traders market. So I think the kind of just the constant grind higher is likely coming to an end. I do worry that things could get very nasty over the next few years in terms of unwinding the leverage in the system. So I think investors need to just be on their toes. Doesn't mean necessarily sell everything, but understand what you're holding, understand the long-term valuation metrics of stocks, where they are comparatively, and just be aware of your portfolio. It's good to go over your whole portfolio at once a month and just say, do I still like this? Does it still make sense for me to own this? in this environment with these metrics, with these valuation points. And if it is, that's fine. Otherwise, nothing wrong with taking a profit. No one went broke taking a profit, they say.
We've had the honor and privilege of sitting down today with Gareth Soloway. He's been a head trader. He's a 20+ year veteran. You can find his work at verifiedinvestingcrypto.com, also in themoneystocks.com, and at Twitter at Gareth Soloway. Thank you so much, Gareth, for joining us today.
Thank you so much for having me. It's a true pleasure.
Pleasure's all ours. And thank you everyone for listening.